every lender has its own market fit, risk tolerance, different types of programs. And a lot of the bigger groups, particularly the more sophisticated contractors, are looking for ways to kind of optimize a lender flow that works for their business.
With me today is Andrea McCullion, Chief Business Development Officer of Foundation Finance. Thank you so much for joining me today.
Thank you so much for having me.
Of course. So let's go ahead and dive right into it. You built an impressive career in consumer finance and have been at Foundation Finance for 12 years now. So can you please share a bit about your career path and your role as Chief Business Development Officer?
Sure. Actually, it's kind of crazy. The company just celebrated its 13-year anniversary a few days ago. So we've crossed over into the 13 years. And I was one of the 4 who helped found the company back then. It started out with 4 of us at a kitchen table, and now we're over 420 employees, 13,000 contractors. We do business in all 50 states, but this definitely was not my career path I expected after college. I just graduated, knew I wanted to get some work experience, so I took a job managing a consumer finance office, and they had me doing everything from mortgages to car loans to personal loans. And then on the indirect financing side, I got to work with merchants and contractors and kind of found that I really enjoyed that. I liked talking with them and I liked doing the business development side of the world. So that's where I ended up moving to. And now with Foundation, I lead the sales teams, the marketing team, and our dealer services team. So basically everything on the front end, from attracting contractors to getting them onboarded to training and account management, all of that falls under my area at Foundation.
So Andrea, Foundation Finance specializes in consumer finance for the home improvement industry, something which is, I think, quite literally on fire right now. What is it about the industry or this specific industry that requires a specialized financing offer? And what are the advantages of working with a lender focusing exclusively on home improvement financing?
Yeah, I think there's a couple things in my mind. The home improvement transactions are generally taking place in a customer's home. You're sitting across the kitchen table from somebody, sometimes for hours. If you've ever experienced like a window sales presentation, you know that they can take a while. So the sales rep's already in the home for a long time, and they really need a lender who can give them a quick answer and who can understand all of the nuances that go along with home improvement transactions. Things like permit issues or change orders or picky customers. Having somebody who kind of specializes in home improvement and all the different types of products there can really help. And I think the other advantage is that when you're working with a lender that specializes in home improvement, the product terms and rates that are offered are generally more compatible with like the useful life of the product. So you can get longer terms for a roof or for windows than maybe you could if you just went with a personal loan lender or some other types of financing. So I think all those things can help the contractors have a better financing experience and their customers.
So can you talk about how the availability of consumer financing influences consumers' decision-making when planning home improvement projects, especially when mortgages have higher rates these days?
Yeah, the higher rate environment has been interesting. I think, a lot of people initially thought that demand would fall off, but it's kind of been the opposite. It's been, you said home improvement is on fire, and I think that's exactly right. Now we're in a place where, mortgage rates have been 6, 7, 8% or more for the last couple of years after historically low, 2 to 3% rates. So if somebody has managed to hold on to that 2 to 3% mortgage rate or anything low for the last few years, they don't want to refinance and get rid of that rate. They don't want to sell their house and buy something new because they just simply can't afford it with higher rates. So it has led to a lot of demand for products like ours and other types of financing besides just mortgages and HELOCs. Looking at bank rate a few days ago, I think HELOC rates are kind of in the 8 to 14% range right now, depending upon your credit. And the rates for a product like ours, either an unsecured or a fixture secured, are in the same range. And it's a heck of a lot easier than having to go through a HELOC process or a mortgage process. So for contractors right now, it's critical to have some type of alternative lending so that they can get the sale closed and not have to wait on the customer to go to the bank to do the HELOC process or do a mortgage refinance. Our products don't have any prepayment penalties. So if the customer does want to do that later, they certainly can. But the contractor can close the sale in the home and get get everything taken care of all in just a few minutes versus days or weeks with a bank sometimes.
So Foundation Finance offers a full range or a range of financing solutions that cover the credit spectrum. Are there any specific products or features that stand out in the market? And are there any new financing products in development that you can share with us?
Yeah, I think from our perspective, it's really easy to serve the super prime customer. There's a lot of lenders who are happy to approve the 780 and above type FICOs, and we are too. But where we've really made our mark in the industry is sort of in the near prime and the subprime customer, being able to effectively underwrite those customers
Mhm.
with fair rates and terms, and being able to give the contractors more approvals overall, which is what they want. They want more approvals and they want to be able to close more sales. So that's really kind of our unique advantage in the market. There's some verticals that we don't do a lot in right now, like HVAC, but we know that our common sense underwriting and the additional approvals can benefit that market too. So we're actually in the process this week of rolling out some new programs for the HVAC market, which tends to have smaller ticket sizes and quicker install times versus like a window job or a roofing job. So we're pretty excited to be rolling those out and start bringing some of these additional approvals to the HVAC market as well.
Foundation Finance recently joined ChargeAfter's embedded lending network. What's the benefit of ChargeAfter for merchants, lenders, and ultimately end customers as well?
Yeah, we're really excited to be partnering with ChargeAfter. As much as I selfishly would love to say that contractors should only use Foundation, the reality is in the current market, that's not the way the big groups are going. Every lender has its own market fit, risk tolerance, different types of programs. And a lot of the bigger groups, particularly the more sophisticated contractors, are looking for ways to kind of optimize a lender flow that works for their business. And ultimately, that benefits us all because it'll lead to greater adoption from their sales reps and from the customers, giving them a professional kind of slick experience. And the ChargeAfter platform does exactly that. So, for us, for the lenders, it helps expose us to groups that maybe don't want to do the manual work involved in using multiple lenders and don't want to have just a single lender flow, but they recognize the importance of getting those prime and near prime and subprime type approvals all in one experience. Ultimately, we're all partners and we're here to help the customers get a good deal and the contractors to get a good experience as well.
And maybe for the last question, consumer finance has rapidly evolved in recent years, and that evolution shows really no signs of slowing down anytime soon. What key trends do you think will shape the industry over the next year or two?
Probably two things that are top of mind. The first being the changes in the administration in DC. There's a lot of
Mhm.
news about the winding down or changes at the CFPB that may affect what lenders can or are willing to do in the market. And so obviously we keep on top of the regulatory trends and see what kind of changes are coming. There's a proposal out there now to potentially cap interest rates on credit cards, which could affect some products in the market. So while we don't offer credit cards, we keep a close eye on those trends because a lot of those things, tend to spill over into other areas if they do
Sure.
pass. But the other thing I think really is AI. I mean, it feels like I can't go 2 minutes without seeing some kind of tool or solicitation geared at either the lending industry or the home improvement
Right.
market itself with these cool AI tools that can do anything from simple content management to proposal creation to handling scheduling, customer service, optimizing your lender flows. So we're talking lately to a lot of different partners who are using AI in cool ways, and I think that for the bigger home improvement contractors and platforms out there, the ones who embrace those tools, the ones that can make the experience good and the efficiencies good, both for the contractor, the customer, kind of all parties, those are the ones that are going to be growing the most in the near term. I think the robots will be running our future very soon.
Andrea McCullion, Chief Business Development Officer, Foundation Finance. Thank you so much for joining me today.
Thank you so much.